Hello everyone, my name is Peng Hao Zhang, and I am here from the Department of Finance, Griffith University. I'm presenting in front of you today a stock pitch for the company AGL. The purpose of this presentation is to analyze AGL's market performance and recommend whether to buy, hold, or sell the stock. To do this, I will be going over detail and the overview of the company relating to the business background, financial analysis, and further detail into the share information. And we will bring out the risk associated with the investing this stock. This presentation will take key point from the AGL Annual Report 2021, the JP Morgan Report, and the Yahoo Finance. This presentation will also provide the investors financial aid for their decision making, which my recommendation is sell on this stock from my finding. Let's start with company background. AGL Energy is an Australian's leading electricity company. AGL is the largest private owner, operator, and developer of the renewable energy asset in Australia, which was formed in 1837. From the map, we can see its operation and investment of the energy asset covered most major states and cities in Australia. Apart from supplying energy and other essential services to residential, small and large business and wholesale customers, AGL Energy proud of their operation of energy business and investment include electricity generation, gas storage, and power generation like coal, gas, and renewable resource. AGL Energy would split into two new leading energy business, SA Energy and AGL Australia. The demerger will result into two entities with separate listing on Australian Securities Exchange. The purpose of the merger is to allow both businesses to focus on their different role within Australian transition to a low-carbon future. However, after AGL has confirmed its intention of demerger on 30 June 2021, AGL share had reacted negatively to this news in morning trading, and the share dropped 10% to $8.47. I believe the key negative was the lowering of dividends for the next 12 months leading to the demerger. That is because some of the investors rely on the dividends for growing their wealth. The company's most recent dividends payment is 34 cents per share, and backed for last year when the company paid a total of 65 cents to shareholders. The Australian Stock Exchange made an announcement on 3rd September in response to a September quarterly review that found the value of AGL had continued to sink as trouble company, and its multi-billion dollar losses and share price collapse that AGL delisted from the ASX 50. It's a bit of challenging time for AGL. The operation cash flow before interest, tax, and significant item also failed compared to FY20. So the company did explain that FY21 was extremely challenging for AGL, was the continued uncertainty regarding energy policy and an acceleration of the market force. Annual Report 2021 reflects this ongoing challenging market and the operating conditions facing the energy industry, as well as the impact of the decline in wholesale electricity price. Let's have a look at the 5-year financial metrics here. If we focus on year-to-year comparison with FY20, underlying EBITDA had fallen by about 18%. Statutory loss after tax here $20.58 billion. Was reported a lot of items include $29.29 billion of impairment loss, onerous contracts, costs associated with acquisitions, restructuring and cessation of Krabby Point project. Next one, the underlying profit after tax, which reflects the sort of day-to-day business of the company did fall quite significant from FY20. And this number here, $537 million, also include $90 million received from the insurance. which was dropped around 34% comparing with FY20. Net cash from operating activity was $1.25 billion, down 41% in FY21, which was due to the reduction in earning and the small outflow from the merging course compared with a large inflow in FY20, a society with the wholesale market position. From a balance sheet perspective, the cash equivalent had fallen about 34%. The debt to equity ratio increased to 55.6% from 40.2% over the last 5 years, which is considered high. The total liability were $9.94 billion, and the current market capitalization is $5.1 billion. Let's make assumption if it's enforced to pay off all the debt obligation, it's technically required issue of more share to raise funds, which means your stock on hand loses value. Let's move to the price history and the performance. AGL shares are currently trading for $5.97 per share. The share price are fallen 50% since the start of this year from the $20, and it's fallen 78% over the last 4 years. Firstly, if you look at the outlook of this company way back in 2017, 3 years performance is being a downtrend and all the way down to the lowest price. Let's look at the weekly chart. It showed a fluctuation and an upward movement on the last 3 days. It looks like a critical point here, which is also 20 years lowest. The risk of AGL, the first one, overall the market has been challenged as wholesale electricity price has fallen. Second one, COVID-19 has continued to have an impact both directly through the cost of society and indirectly through surprised industry demand. The COVID-19 related net bad debt expense was $29 million. Third, from the FY22 guidance range, we can see underlying EBITDA is going to down 28% to 16%. Underlying net profit after tax is going to down 60% to 27%, which is not a good sign for investors. And the AGL is still paying dividends, but the company is unprofitable. And next one, high debit level 55.6%, which we just mentioned before. My recommendation regarding AGL is a sell according to my finding and the risk tolerance, even though it's fallen a long way. Some may feel this is an opportunity to get in, but it's got a lot of challenges ahead of it. I still suggest to sell it as I believe the long-term earnings are in decline. Thank you for your time, and this is my reference list.